Good Monday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show, all the way from Philadelphia with this man, Dmitry Pargamanik. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with a disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your RIA, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And I'm going to share my screen. If you guys are joining us for the first time, the reason we do this show is really to try to answer any questions you guys have about the Market Chameleon tools, data analytics. If you want to ask a question, you could put it in the live chat on YouTube. Will's monitoring them. He'll let me know and read it back to me. If you want to come on a show and ask your question live and direct, we also provide a link to Zoom. When you click on that link, it takes you over to Zoom. Once you're inside Zoom, there's a button, raise your hand. Click on that. You don't have to turn on your video camera. Once we let you in, everybody could hear you. You could ask your question directly. While we're waiting for questions to come in, what we'll do is take a look at the pre-market report, see what's trading the pre-market hours. We did have a couple new features we pushed out, I think, on Friday. So I'll mention them, show you what they are, what they, what the intended purpose of them is. And then if we have questions that come in, Will, let me know. I'll take those questions as they come in.
Also, reminder, we have a webinar on tomorrow, 2 p.m. in an interactive broker webinar. I think volume profile, maybe.
Yeah, exactly. So tomorrow at 2 p.m., we're going to do a webinar with interactive brokers. You have to register to view it with interactive brokers. We're not the ones hosting it. They are. So it's not going to be on YouTube like these. And we're going to discuss option volume profile. So we'll get into breaking down the option volume. A lot of times people look at option volume and they'll look for unusual option volume or something's going on. But within that option volume, you could break it down into different pieces and analyze it further, what's going on in that option volume, because obviously you got different option contracts, different trade conditions, different trader cohorts, all that stuff we're going to take a look at tomorrow. So that's at 2 p.m. with interactive brokers.
Perfect. And I put that link in the YouTube chat. So
awesome. And thanks, Will. So let's get started with the pre-market report. And we're on there right now. These are stocks that are trading in the pre-market hours. We have a list of our most active stocks, list of our biggest percentage gainers and biggest percentage decliners. Coming down here, I see 163 stocks made our percentage gainers list, 47 on the decliners. From this perspective, we're looking like a more bullish bias at the open. Let's filter down this list to only S&P 500 companies, because we do have stocks in there that are low cap stocks. You can see here the market caps. We have ETFs, leverage products, closed-end funds, a lot of different equities that trade on the exchanges. So we want to kind of get a perspective of what's going on in the S&P 500 companies. And to do that, we want to filter down this list. And the way to do it is using the filters here above. So this one in ETF, I'm going to drop this down and you can select from a list of ETFs. The top one here, SPY, is the S&P 500 ETF. So let's select that. When you do that, the list below will get filtered by stocks that are holdings of SPY, which are the S&P 500 constituents. And here we see 30 stocks made our percentage gainers list, 4 in the decliners. So this does show us that right now, from this perspective, we are lining up for more positive open in the market. I think it was a big rally Friday, continuing on today. So we'll see how that does, but maybe I'll take a look at the price action of SPY versus expected ranges.
Cool.
On as well. If there are no questions, let me quickly show you guys a couple things that we're doing here. Let me use SPY as an example. So go to SPY, and down here under options, you could select activity. Okay, and these are options activity. A table will load in here. And this table here, we are working on it, so you're going to see some more changes to it as we build it up. And it kind of tries to summarize what's going on in the options market. And this is part of what I'm going to be doing tomorrow as well on the option volume profile. But the new column we added here is to show really quickly here. This here is broken down by expiration. Okay, so here you see in SPY, you have all these different option expirations, and then you have statistics for each expiration going across. We added so far this here percentage of total volume. So when you look at the volume in SPY, you can see that it's dispersed. Sometimes there's a big concentration of volume in expiration. Sometimes it could be more evened out. So here we show what percentage of total volume is in a particular expiration. And here, this really quickly shows us that 43.3% of all the volume on Friday. So this is Friday's volume. We're not open yet today. So this is as of Friday's close. 43.3% of all the option volume was in that expiring expiration. In other words, zero days, days to expiration. So you could see how much of the volume is concentrated on those very, very short-term dated options, which give you, right, a lot of gamma. And really, it's to make a wager on one day, right? It's an intraday wager on an option. And then the next biggest one is the option expiring today, 18.7%. It gives you an idea what are traders doing, where are they concentrating, what type of options are they looking at, so this really gives us a focus of where that volume is mostly clustering. All right, and you can see here that's more than 50%, almost what is that? 60% of the volume is in the extremely, short dated end of the curve. All right, but let's compare that, let's say to something like Amazon. I'll get into this a little bit more tomorrow, but here you could see Amazon, a little bit similar situation, but we did get a pop here, January 20th, 35%. And that kind of points out, okay, what's interesting about that? Why are they going out on January 20th instead of this? So we'll click on that. And this is part of what I'm going to discuss tomorrow. Looking at that option profile, then digging deeper into it, right? It's from the top level to the bottom. Let me also let's go back to SPY. So another thing we added here, I'm going to come here to open interest, and I'm going to be enhancing this report as well. And try to look at different, so I know I'm throwing a lot of numbers at you guys right now. I'm going to explain it and try to figure out, a way to kind of make it easier, easier to read, because there's a lot of numbers and you have to get used to how to read them and kind of figure out the important ones. But for now, this is how it's broken down. So here it's by existing expirations. So these are the expirations that are still tradable, right? So January 6th expiration now, that's gone. So the next one's January 9th. That will expire today. And what a couple statistics here are, it shows us the volume. So this is the volume on January 9th, 1.831 million options traded, option contracts. And then this is the open interest, 524,000. And then we see what the open interest changed by, 285,000. Okay. And what we do here is we want to compare, well, out of all the volume that traded, how much actually converted to an open interest change? Okay, it's kind of like how much of this is churning, or how much is this day trading, or just kind of transferring positions, or is it adding to more existing positions, or positions really being built up, or is it more of just, short-term day trading in and out, or just somebody transferring positions over from one person to the other, but not really building on top of existing positions? And that's one of the things we want to try to track here. So we could see here, out of this 1.83 million contracts that traded, the change in open interest was 285,000. In other words, if we compare the total volume versus the change in the open interest, then the volume was 6.4 times greater than the open interest of the change. Okay, so 6.4 times more volume than what the open interest changed. Basically, that there was a conversion of 16% of the volume into an increase in open interest. All right, and that's kind of showing us that even those people with one day to go, from Friday's trades, options that expire today, with one day to go, aren't even committed to that one day hold. So a lot of them might be just day trading it and not holding those options overnight, or there's just kind of a transfer of positions going on, but not a big increase in open interest relative to the volume. Okay, so maybe here might be a little bit different story. January 19th, we saw 17,600 contracts traded, and the open interest increased by 10,000. So that's a 62% conversion. So 62% of that volume added to open interest, right? So that might be interesting to look at, because whatever happened in there so far, that position built up, and they remain committed to that position, right? It wasn't just a quick, and I think as you go out further, you'll probably see that more. But you could see here, January 19th, 62%, February 24th, 73% of that volume stayed committed to the trade. Okay. And if we go down here, we added it, that column by contract, by option contract. So if you click on any of these, let's say we click on, which one is January 19th, right? I clicked on January 19th. And hold on a second. Why is my, so there might be, a bug here right now. All right, so I just found a bug. So we just published this. I feel like there's a bug. It's not giving me all the info that I'm expecting. Hold on, let me see if that's, so I'm not sure why the January 19th. So I'm going to go to the February. I'll take a look at that. But here in February, if we look through the previous days, so what this is showing us is the volume and the open interest change, right? So 87% of that volume converted to an open interest change. So you could read it that way. But a faster way to do it is we created this button churn. And what this is showing us is this is sorted. You have the call options on one side, put options on the other. Okay. And this here, you could sort these columns. The sort is defaulted by the biggest open interest change. So it's looking at the option contract with the biggest open interest change on the day. So you can see here they're declining, starts from here, starts declining. Okay. And here, January 9th, that's expiring today, 395 call, that open interest changed by 14,000 contracts, with the volume on that contract 29,400. So the volume was 2.1 times greater than the change in open interest, and 47%, almost 48% of the volume on that day converted to an positive open interest change. Okay, so 48% of this volume stayed committed to that trade, which will expire today on a 395 call. All right. Next one down, the 400 call. You can see here also 14,000 contracts increased in open interest. That was the change. 21,000 total volume. So 65% of this volume converted to a higher open interest. Okay, and that we do the same thing on the puts. So you could see in the puts, the top one was February 17th, 370 put. That's going out further in time. So that is a little bit different. It's not in the shorter dated option. That's going out to February 17th. The open interest increased by 52,000 contracts. So this is the new open interest now, 93. So that's a significant change. The total volume on that contract was 74,480. So you could see that the volume as a ratio of the open interest change 1.4, and 70% of that volume, 70% of this volume converted to an increase in open interest. So a lot of that volume stayed committed. That's what this is indicating here. All right, so I don't know if there's any changes, but we'll talk about option volume profile more tomorrow. But these are the kind of new indicators that we added on Friday. Sometimes we add new indicators. I forget to mention them in the morning, but if there are no questions, let me go and move on. And you're still on mute. Okay. Let's take a look at implied moves here. So here's, and this is also following up on questions that I get coming through on the emails. You know, sometimes we don't get questions in the morning, or people don't have time to come in the morning, they'll email me the questions. Here, this is an SPY, and what it's a chart, and it's looking at the daily performance in the stock. So these are the green and red. That's the daily performance. So the green Friday, we're up 2.3%. The day before that, the red, we're down 1.1%. So you can kind of just get a visual of how the stock performed on a percentage basis from day to day. And this is going back 20 days, I believe. So here, a month, right? So this from December 8th to January 6th. And it gives you a quick visual because you see the percentage moves, how big they've been or how small they have been. You know, the up moves versus down moves, the magnitude of the up moves versus down moves. So all this is giving you kind of a visual of what the stock has been doing from day to day. Okay, so what it's really trying to do is look at the magnitudes of the percentage moves, and in which direction were the big moves versus the small moves. All right. Then we have the bar here. So what does this bar represent? And that is derived value from the previous day's options. So when we look at the option prices, the options are, if you take the option prices, run it through the Black-Scholes model, you get an implied volatility, and from the implied volatility, you could estimate what is an average daily move predicted. So the option prices are moving around intraday, they move around, you know, from day to day. So the premiums could go up, the premiums could go down, and from those premiums, we could derive the average daily move predicted by the stock, predicted by the options markets. Okay, and you could see that these bars are changing. So they could go from very high to come down to very, very low. So from day to day, they are changing, and sometimes they could go up, you know, because maybe the markets are expecting a bigger move, like a Fed announcement or CPI or something that can really move the market. Then the option premiums will go up. When the news comes out, the option premiums could go down, or just in general, the options could be, the stock can be moving around, option premiums go up. So this is from the previous days.
Hey, D,
What happened the next day?
D, you may be answering this now, but 4D is asking, where is the implied move for January 9th? And obviously all these moves are looking in the rearview mirror where it actually moved the day. You need the trading day for it to show up on this chart.
Right.
So I guess his question would be, how would he find today's, what the market's implying for today's move?
Okay, yeah, that's a good question. So let me show you that, and then I'll come back to this chart. So under options, where we were just now, activity, right? And when we look at the over here on the expiration, right? If we move down all the way down to here, this is looking at the straddle and saying the straddle is implying a little bit less than a 1% move, or if we converted it to dollar move, $3.36. So that's for 1 day. Now, this here is not converting it to daily moves. This is looking at the total value of the straddle for, so you have more days to expiration. So you could see here at this point, we almost have for the next almost 10 days, we have an expiration every day, based on number of trading days. Okay, so this here is looking at number of trading days. So you could kind of look out what the markets are expecting the move to be from now based on number of trading days. The one I was showing you is converting it to the average daily move. So it'll probably be closer, you know, to this one, because it's going to look at the nearest term expiration. But that's where you would go. All right, right here, this is showing us, and this is based on Friday's close. We're not open yet, so this is looking at Friday's closing. expirations. As the market opens, we start recalculating. So periodically throughout the day, we're updating this report. Okay. So you could see here, we moved $8.70, 2.3% on Friday. And you could go out almost 4 days, right? It's between 3 and 4 days that they would expect another $8.70. So still a lot of short-term sellers. And I think part of it is that these people, what did we just see from the front month options, that they're rotating throughout the day, right? So a lot of these traders, I think, could be either buying or selling options for the gamma and rotating those options as the market is moving, right? So they could start out selling straddles as the market's moving. They could be closing out and selling the next at the money straddle. And so I don't know exactly everybody's, strategy there, but it looks like that they are rotating those options throughout the day, because not a lot of those options that are being traded, stay committed. That's what we saw from the open interest changes. Okay.
Very interesting, Dave. Thank you so much. We did have a question, kind of off topic, but Baiju was asking, do you have plans for recording the SEC 13F filings and perform some type of analytics on them in the future? That's the question.
Which one? SEC, which ones?
It's the 13F filings. I think those may be institutional ownership, I think.
So
as an investment manager exceeds 100 million or more on the last trading day of any month during the calendar year.
Yeah. So when we add data, import data, and do analysis on it, it goes through a decision-making process. And one of them is that, is this data and information already available and easily accessible, and is it available already at no cost at all, right? At zero. So if those SEC filings and the analysis on them, number one is, if it's very easily available and it's already at zero cost, there's nothing really we could be adding to that, right? So unless we can stitch it together and paint a better insights and analysis, right? So that's the one thing, like what we in our decision making, because what we want to do is also be efficient with the website, because for us to keep our website at the lowest cost to our customers, we have to go through those decisions. Otherwise, we're going to be spending a lot of our resources going after information that you guys could get anyway somewhere, right? And there are plenty of websites that do it. So that's one of the decisions that goes, like, if we're going to make it efficient and keep the cost for you guys at the lowest that we can, we try to say, okay, if our customers can already go and get this information very easily, at no cost, let's concentrating on bringing in data and information that is not easily available. There's a higher cost that we could bring value to. So as far as like these SEC 13F filings, once they're reported once a quarter, there's already a lot of information, data out there that people are doing it. And for us, we try to go after more timely information that might give us insights. So we do go into ETF holdings. So that's something we do track, like inflows and outflows in ETFs, because they're reported daily, right? So those are reported daily. Those are harder to get. There's a higher cost to it. So we would go for data and information like that. Again, it's because, there's a lot of data and information, and we have to make a decision on, what to concentrate our resources on first. And it's really, with the thought process, how do we bring what we think is relevant, that we could add value to it, that will provide you guys with value, and that you will not be able to find somewhere else, at cheap or no cost.
Yeah, and most of the stuff, I mean, if there are any SEC links, they do, you can grab them and see what they are. But it's 45 days after the fact with the 13F filings anyways, if they have to.
Exactly. So you're looking at you're looking at very dated information.
We do have a list of the 14 or 4F filings, I think, the insider trades that appear.
We've done that before, and then what we realized was that, all right, spending months and our resources and stuff developing that, and then providing you with something that is free that you could get somewhere else. What it does is that it takes away resources from using that development time to provide you something more valuable that you cannot easily just go and Google out there. So that's at least our decision-making process.
Awesome job, D. Thanks so much. And Bajru says thanks. He understands. Great job, my friend.
All right, everyone. Thanks for joining. Stay safe out there. Have a great trading day, and we hope to see you guys